Hi there and welcome to this week's edition of Maqro Minutes on the 24th of March 2021, which is 1 year and 1 day since the low back in March last year, which is a very sweet anniversary. Now, as per usual, the information disclosed in this presentation is general advice only, does not take into account your specific circumstances and should not be acted on without full understanding of your current situation and future goals and financial goals. So, stocks in our universe this week. We've got CGC, Telstra and QFN. Now, first one we got here, which has had a good day today, up nearly 6% at $4.81. We recommended this CGC on the 18th of March. The price is around about $4.50. So CGC is a horticulture company. It's got three business segments. The majority of it is in retail, about 79%. Customers are Coles, Woolies, Aldi, IGA, and their principal activities is production of fresh fruit and vegetables. The next biggest sector of their the business is their wholesale, independent grocers, and the food services industry. They do wholesale packaging, marketing and distribution of produce. That's about 13% of their business. And then lastly, 8% of their business is international. So it's in China, the UK, European markets, South Korea. And they've got farms for blueberries and bananas in Morocco and China, and licensing its proprietary blueberry variety at the moment. So we think there's various catalysts supporting its growth. We've got some long-term weather conditions improving. They had some strong cost-cutting growth initiatives, and they've had some real momentum in their avocado, mushroom, citrus and berry markets. It's also trading at a very attractive valuation relative to its peers at 12.2, whereas the peer median's around about the 17 mark, but obviously that would have changed a little bit today with the price up. Now, next one we've got is Telstra. Also a stock that's had a pretty good run over the last week. I think it was around about 306 about 8 to 10 trading sessions ago. It traded 335 this morning. In its March update, Telstra will legally restructure into 4 separate operating businesses. So there will be Infraco Fixed, Infraco Towers, Servco, and then their international. So we'll start with Infraco Fixed. It'll operate in Telstra's passive or physical infrastructure assets like ducts, fibre, data centres, and the exchanges that underpin Telstra's fixed communication network. It provides optionality to create additional value from these assets in future. Now, the second one, which is the interesting one, the Infraco Towers. It will operate Telstra's passive or physical mobile towers. So Telstra's looking to monetize this asset and expects to receive a binding offer before the end of this calendar year. So that's been I think the main catalyst of why the Telstra share price has started to go up, and I think is widely regarded as the reason for this split. So next on the Servco, that's their customer-facing segment, which is product development, customer support, customer experience. Servco will own active parts of the network, including mobile spectrum and mobile radio access network. International as well is the last section of Telstra that they're segmenting into. That's their significant submarine cable networks, which is one of the largest, predominantly wholesale carriers on international data traffic across Asia. So this will be undertaken by way of schemes of arrangement. Shareholder approval of these schemes is scheduled in the AGM in late October this year, so it's still very much down the line. We do expect some stiff objection from other suppliers like TPG, etc., who have already said they would object to Telstra basically charging rent for their infrastructure back to their own sold off assets. So now part of the commencement plan for the process for the external strategic investment into the Infraco Towers would be early in 2021. 2022 financial year, that is, with binding offers to be submitted by the second quarter of, also the last quarter of this year. So next one we've got up here is QFN. QFN's an ETF. We recommended this also on the 18th of March. Its share price was around about $11.10 at the time. It's roughly around about the same price as it stands currently. So Westpac's had a little bit of heat today on the back of New Zealand calling it out on their lending requirements, etc., in the New Zealand property market, their corporate governance there. I expect this to be fairly transient in effect for the Westpac share price, but did affect it today. So, now, this ETF is diversified banks, 71%, 9% is diversified capital markets, 9% is in insurance, and the rest is in other financial service, miscellaneous. Look, the current economic climate, we have low interest rates, increasing consumers' confidence, multiple quarters of unusually high savings rates, really, which makes for a perfect storm, which will benefit the Australian financials in the short term, and will definitely continue to do so as the economy grows. In the short term, we expect to see the recent trend of new home loan approvals to continue, which this increased the rate of loans, expecting to boost their long-term profits as interest rates rise. In the medium term, prudent actions from the bank during the pandemic should translate into very attractive dividends. So, whilst a rising interest rate environment would benefit the net interest margin. So now we move on to stocks to watch out for over the next week. So basically we've got three here. These are the top three performers of the last 12 months. Just to preface this a little bit, so the Australian stock market's bounced about 40% out of its from 1 year ago, 1 year and 1 day, whereas the S&P's jumped 70%. We've done some research on forward earnings versus the index, and we see the Australian stock market is lagging forward earnings, which is the reverse in the US. We're looking at these three particular stocks, LYC, Zip, and Virgin UK, Virgin Money, basis from fund managers. So, look, it'll affect some more than others here. So we'll go into to LYC here. Best performing stock in the ASX 200 for the year, including a 60%, returning 60%, including dividends so far. It's a Malaysia-based company in integrated extraction and processing of rare earth metals. So lithium's been a very hot commodity in the last year. But stellar performance could lead to profit taking over the next week. It was down 3% today. And we probably expect as funds have their quarterly rebalance, there'll probably be some profit taking in that one. So next one we've got up is Zip. Now Zip's number 2, ASX 200 this year, returning 55%. It's known as one of the top competitors for Afterpay in the buy now pay later sector. Look at its peak around, it returned 150% year to date. It's about $14.50. We're currently, I think, down 1% of the day. It's around $8 now, so it has it's fallen back about probably 45% as the broader tech sector's dropped due to concern from rising interest rates. So we probably wouldn't expect to see too much profit taking in that one, given the move possibly has already happened, and funds would have been forced to make a decision somewhere in the last 45%. So the last one we've got here in our universe for the next week is Virgin UK. So it was the third top performer, returning 47%. It's the one I'd probably be most concerned about. It's a UK-based company that offers a range of banking services to UK customers and consumers, small and medium-sized enterprises. It serves nearly 3 million customers through an omni-channel model of online, mobile and telephone banking. Unlike Zip, it had a much more gradual rise in the share price. And look, it's down 4% today. I think it's had a high of $3.62 and currently around about $3.25. I dare say that one could be the most vulnerable to profit taking from a quarterly rebalance point of view. as it's probably not fallen back as much as the other two. So now we move on to what to expect over the next week. And just as an aside before that, we did see the listing of Airtasker this week as well. So it opened at $1. We had a entry price around about the 80-cent mark. Unfortunately, got to 88 cents, but and on the first day settled from the listing price of 65. It was settled at 105, and today has actually been to 195. So that is quite a significant return from the listing price. Over 300 or nearly 300%. So look, we probably think that this stock might steal a bit of the thunder away from stocks like Afterpay, which has seemed to have settled down recently. After Airtasker becomes essentially potentially the new market darling and hogs the headlines. So it'll be interesting to see how, even though they're not necessarily in the same sector in terms of competing for each other's business, there certainly might be less press and less trading volume going through in Afterpay, considering Airtasker might be stealing a bit of its thunder. So this week, back to the economic data releases. 11:30 on Thursday, we've got our GDP numbers in Australia. Preliminary figures from last month indicate a 4.1% growth expectations. Which means the final figure could be significantly above or under this figure. It will depend on market impacts. Either way, the result of its potential risk to markets, a figure significantly above 4% could increase inflation expectations and cause fears of interest rate increase, whereas a figure significantly below could potentially damage short-term earnings expectations for US companies. I'm going to have to redo this bit. Sorry, I thought it was Australian. So, economic data releases to look out for over the next week. So on Thursday at 11:30 p.m, we've got US GDP numbers for the December quarter. Preliminary figures from last month indicate 4.1% growth, which means the final figure, significantly above or under this figure, will impact markets. The final GDP number generally is not very volatile from expectations, given there's been two figures leading up to this. Although, given the volatility in GDP numbers over the last 12 months, there is a slight chance that we could have a number either side. But where it could affect markets basically is a number significantly above 4.1 could increase inflation expectations and cause fears of an interest rate rise sooner rather than later, which would not very in line with the Fed's commentary at the moment. While a figure significantly below could dent short-term earnings expectations for US companies. The EU Economic Summit will be held Thursday and Friday, while an additional summit will be held on euro currency in relation to how to strengthen its international role. The general discussions will be around the pandemic, single European market, industrial policy, digital transformation, relations with Russia, and ongoing hostilities in the Middle East. Any policy changes at either summit could see markets react. Most significantly, a decision could be made whether they go through with a threat to block the AstraZeneca vaccines produced in the EU, blocking them from being produced in the EU from being exported. This would impact the vaccine rollout in other markets, which would hamper travel and oil-related stocks. Don't necessarily see that as a massive risk, really. There's been a lot of articles bandied around the use of older statistics from AstraZeneca to boost their effectiveness figures, but it seems to be a little bit of a witch hunt, in my personal opinion. So I don't really expect too much out of that, and I dare say would be something that would be telegraphed. There is in Germany a lockdown over the Easter period. Basically, there's concerns that they've pretty much opened things up a little bit too early. And I think this is just more of the government showing caution rather than genuine panic about there being another COVID outbreak, to be honest. Also, the last but not least, next Wednesday, 1 a.m, we've got US Consumer Confidence Index for the month of March. It's usually a pretty important indicator. It's really one of those ones that we need to see consistent gains over a period of time. They can be quite volatile, but it definitely is. Is a very key thing in the Fed and the government, US Congress and the Democrats' rhetoric at the moment, really trying to underpin the consumer confidence over there and get the recovery back, kicking goals. So look, it won't be something that affects the market massively, but it's certainly one of those things that's very taken note of in terms of underpinning the US recovery, particularly the global recovery. They're well ahead of the rest of the world. They've beaten the schedule for vaccination rollout. They've gone over 100. I think they did 84 days. They did 100 million vaccinations, which was 16 days early. So things in the US, there's a lot of pressure there as well from the airlines, etc., and restrictions on state borders to be relaxed, given the speed at which they're rolling out the vaccinations. So we would expect that there'd be more good news generally, and if the European rise in infection rates dies down, we should see the reopening thematic come back into the market. So that concludes the Macro Minutes. Thanks for listening, and we will chat again next week.